All right, you guys have got me psyched to try this the right way. Okay, so I think this is about as basic as I can get, and please forgive me if it's a little remedial, but it won't take a few minutes, and then there won't be any questions. Okay, so I'm in Excel right now, but this is an example stock chart with nothing on it. So here's some dates, and in here you put the number, whatever number. So for example, let's say it's January 8th. And let's say I'm going to put 25 in here. So, right? So on January 8th, the price of whatever stock, of ABC stock, the price of ABC stock was 25 on January 8th. So on January 9th, it was 30, right? And so on. So I'll say, hey, I'll just make up numbers. 5 in January, 5, 15, 20, 30, 40, 10, 20, 35, 45, 50. You see them going on the other side. And so 45, 50, and 5, right? So that's it. So so on a stock chart, obviously you guys don't know all this, but this is on every day. This is where it appears. Do. And all they do in a chart normally is they just connect the lines. So look over here. Same thing, right? It's just each point is just connected instead of not. So that's all. So I'm sure you both knew that or whatever, but that's all it is. And besides that, a stock like, the stock Netflix, when you try to find it on a chart, generally you have to know what the symbol for it is. They call it the ticker symbol or the symbol, and you can look them up just online or sometimes in the program you're using or whatever. But Netflix, for example, is NFLX, or Apple is just AAPL. So that's how the stock chart works. And I'm talking about things that I trade are based on the S&P 500, which you guys know is just 500 companies. It's their prices all just averaged out every day. So, and you can bet on that way. Like if one company does really bad or really well, it doesn't move everything so much. All the companies have to do bad, or all the companies have to do good for it to move a lot. So the general so it's more of an idea of what the general economy is doing, and not just one particular company. So, and for what I'm doing, and a lot of people trade it, so for what I'm doing, I'm going to use that. So we don't have to get into why right now, but the only symbols that I use for trading are going to be SPY, which is like a stock. It's called an ETF, but think of it as a stock. It's like a stock. And it is based on the S&P 500, which is why it has SP in the title. Or the ES, cancel that. Or the ES, and you put a slash in front of it, and that is also the S&P 500. It's a futures market, which we don't need to even talk about what that means. It doesn't matter right now. It doesn't matter for this at all, really. Or the MES. MES, and that's another. And they all move exactly the same. So if you go on a stock chart and they all move up and down exactly the same. The reason I trade the three different things is because this one is a stock. So when you see it, it's called. You might see it called an ETF instead of a stock, but that just means it's a fiction, but it's an electronically traded fund. But just think of it as a stock. for all intents and purposes is a stock. And this is open 9:30 to 4:15 every day, Monday through Friday. Futures are open from let's see. So this is like Monday morning. So I'm sorry. Going back to SPY. The stocks are open Monday morning at 9:30. Close Tuesday at 4:15. God damn it. I'm sorry. Monday morning at 9:30. Close Monday evening at 4:15. Opens Tuesday morning at 9:30. Closes Tuesday evening at 4:15. So every morning opens at 9:30. The same day it closes at 4:15, and from 4:15 at night till 9:30 in the morning, it's closed. And if the market moves really fast, like crazy, overseas or some news happens or whatever, this could move. You could find out that this could move. Oh, this is Luis calling. 1 second. All right. Hopefully that was like a 6 or 7 minute thing. So hopefully I'm making sense here. Okay, I was just trying to explain that the stock market's open every day from 9:30 to 4:15, not open on the weekends. And the risk of that is sometimes if some news happens, say at 4:30 in the afternoon or 5 o'clock at night, bomb blows up or something, and the stock market crashes, what that means is that a whole bunch of people, after hours, they sell all their stuff, so as soon as the market opens, it falls. So the reason that the prices go up or go down, if there was 1 million people buying a stock, and 1 million people selling, it wouldn't go anywhere. But if more people buy, then it goes up. If more people sell, then it goes down, like that. Or more shares. If more shares are bought, it goes up. If more shares are sold, it goes down. And there's like pressure each way. And so, if at 5 o'clock at night when the market's closed, if there was a big catastrophe and people get scared and they want to get out of the market, all these sell orders will go in and it will fall. The market will fall. And so what people do, there's another market called the futures market, which tries to predict the future, basically. And it is open from Sunday night at 6 o'clock at night, New York time. Sunday night at 6 o'clock at night, New York time. And it closes Friday night at 5 o'clock at night. So it's open Sunday at 6 and closes Friday at 5, and it's open continuously. There's an exception every night. There's an hour where it closes just because they have to settle accounts. But that's it. So at 5 from 5 to 6 every night it's closed for an hour. But other than that, it's open 24 hours a day, 5 days a week. So that's a way to protect. So let's say at 5 o'clock at night the market's going down, you could do something to take advantage of that while everybody else is sucking it because they're getting hurt in the stock market. You can get in the futures market and help yourself and protect yourself at 5 o'clock at night or 6 o'clock at night or 7 o'clock at night or whatever. Okay, so that's that. And the MES is the same as the ES. It's just 1/10 the size. So when you buy a contract, it costs money, and so this is just cheap. That's all. But it's not you don't have to understand this yet. I'm just trying to show you that's the idea of how it works. So if you look at a stock chart, like if we went over here and we put in SPY, SPY. And then these are, let's see if I, and you can say, okay, I want to see it every day. I want to see it every day for a year. So it's the same thing, right? Here's the prices, and here's the dates. And there's a point every time. They have a point and a line, and every time it just connects all just like this. It has all these dots, and then they connect them together to make the chart. So this is how far back it goes, and this is the price. Now, you don't necessarily want to do it daily. You could do it every week. So imagine that instead of this being January 1st, January 2nd, January 3rd, January 4th, it was so now look, it's I guess I don't know why that didn't update, but okay, it doesn't really matter, I guess. So anyway, you can see this should have updated. That's weird. Okay, so I must have done something wrong, but whatever. So you can see here that January 8th, you only have the one. Oh, I think I know why. You have to make it automatic. You don't need to see all this. This is ridiculous, right? Here, reset. Whoa. Okay. Sorry. Let me just back up. Anyway, I don't want to get bogged down. You get the point. Basically, you don't need. Now you only have 3 points because it's once every 7 days, and you could do it once every month, once every year, whatever. So the thing is, on when people are looking at the general trends, they're going to look back. You could say, hey, I want to see it for the last 20 years. I don't need to see it every day. I can see it once a month. So now this is like, okay, every month, once a month, what is the SPY doing for the last 20 years? So look back here. Look at the date up here. Look up here. This is the date. Back here, look, that's 20 years ago, right? So, and then you see what it's done over all this time. And then you can say, well, okay, that's nice, but how do you trade? So you're going to change how much time you look back and how often you have a dot, depending on what you're doing. So for me, this kind of trading, I get in and get out of my trade basically once a week for this one trade that you're seeing right now. So I don't want it to be a daily chart. I want it to be what they call an intraday chart. And I want to look back 5 days or so, or let's make it 10 days. And I don't need to see it. I don't want to see it once a day. I want to see it every minute, every 10 minutes, every 5. I can make it every minute. So here's 10 days every minute. So now look, this is every minute for the last 10 days. There's a dot every minute. Now if you do that, it makes the chart really long and kind of a pain in the ass. Depending on what you're doing. So I don't need every 10 minutes. I'll do every 10 minutes. I'll make it every 10 minutes instead of every 1 minute, so it's 1/10 the dots. Okay, so now you can see every 10 minutes it makes a dot, and then it connects it. And you can see here are the prices. Now 10 apart that's too much for me. I need to make it something else. So I'm gonna play around with this chart for a second so you can see it. Okay, so that's more of a normal chart. So you can see, oh well, like right now, you look at the prices of the chart, and look, it's just about to hit 338. So let's just say I want to take action if it hit 340, or I want to take action if it hit 336. And so you can literally go back to just 1 minute and say, listen, if it hits 338, if the chart hits 338, say price hit 338. This is an alert. The program will tell me if the price hits 338 if I do this. See, it makes an alert right there. And I say, or tell me if it hits 337. And I could do it again and say, create an alert, price above 337, price hit 337, and then I would get a text or an email or whatever. And let's say I didn't want to do anything until it did one of those things. That's what it is. So I move or I take action or don't take action depending on certain things. And And sometimes this is how you can be told by the program what it is. So I'm going to get rid of those. And so when I say this is based on the S&P, you see how this is right now we're in the 300 range, and the ES or the MES. Let's just look at the MES for now. The MES is this is 3,300, but it's the same thing. It doesn't matter. So when this goes to say 3,380, the SPY will go to 338. They're very, it's on purpose. One is 10 times more, but it doesn't matter because it's going to matter that you guys, I'll be switching back and forth from these two, and it won't matter. If I say 330, if I'm on a chart and you see it's in the thousands and I say 338, I mean 3380. So all I'm talking about is that I say, if it hits 338, I got to do something. Or if it hits 3380, I got to do something. And it's either one. It's the same thing. It's just it's one is 10 times more, but it doesn't matter. So it's all the same. The S&P is going up and down, up and down, up and down. And so that's the whole idea of this. Hey, one more thing, you guys. I just wanted to show you really fast. This is not supposed to understand it, but just to prove it out while I'm going. And you can, because so later you'll understand, and I'm not wasting these days while doing it. That trade I was telling you about, that I'll just, you don't have to understand it yet, but I just wanted to say, look, here, this is live. Here's where I'm at. It goes back and forth, does all these different things, and I'm at 109 profit right now, and look at that blue line up there. I'm headed for, as of right now, around $300 or so, but it probably be less. But that's what I'm doing right now, and this trade ends tomorrow. So I'm in this trade, and that's what I'm doing. And if it moves down here, moves up here, I'm gonna make another adjustment. The price moves, I'm making another adjustment. But right now the price is at 337. Like I was saying, on the SPY it would be 337. Be like 337.6 or so on the SPY, and in this on the MES it's 3376. But you just put a dot there or not. But anyway, so right now, if it moves up or down, I'll take action. Probably won't. And I'll probably just get out early today if it starts moving up too high. I'll get out early today. If it moves, much more than like 3390 or 3360, I'll probably just get out today. Okay, so I just want to show you how this trade works. And basically, it's very hard to lose money actually on this trade. So, okay, that's it. Just wanted to add that.